There's a saying that I had for about 20 years now, and don't let a good crisis go to waste. Use this as an opportunity to transform the way you think, to transform the way you act, to transform your rhythms, maybe change careers, I don't know. But the fact of the matter is, what can you do now? And what you could do now is make sure you have a solid financial foundation and start building that right now.
So the rich get richer after a downturn, after a crash or a crisis. Why? Because they're not operating on fear. They're operating on logic. When looking for opportunities, finding financial opportunities in a crisis, there's going to be all sorts of things. But we have to really go back to, does it fit in our financial plan? And if it fits, then you should go for it. If it's an opportunity that you find and it fits in your plan, then do it.
Welcome to episode 3 of Crisis Investing 2020. Really great to be with you. We're building momentum now, and I'm loving the fact that we can share this information with you. It's making a difference in people's lives. These are very confusing and very troubling times, and if there's anything that we can do to help bring some light to the situation, we want to do it. And I want to ask for your help by sharing this with others. We want to get this to as many people as we possibly can. It will make a difference in their life, and your sharing it is helping to spread the light. In episode 3, we have Rick Sapio and Alan Aquina. Rick Sapio is the CEO of Mutual Capital Alliance. This guy is a turnaround thinker. When the going gets tough and you're having challenges, he knows how to turn things around and get things back on track. He's got a phenomenal history, not only as an investor himself. He worked on Wall Street for years. He has done corporate turnarounds. His vast experience over the decades of his career are coming to play right now to serve you in the highest possible way. Secondly, we have Alan Aquina. Alan is the founder and CEO of 101 Financial. And what I love about Alan is not only his purpose and vision, which is helping so many people around the world with their finances, but his common sense approach as to what you can do right now, given the circumstance, to really safeguard your finances, to think clearly around what you need to do. He has got some great approaches that will make a difference in your life, so make sure you pay close attention. Let's dive into episode 3. Well, greetings. Very excited to have this conversation because I have to tell you, in a crisis, if there's anybody that I would call first, it would be Rick Sapio, our next guest. Rick has extraordinary skills in business turnarounds. He understands crisis and crisis management, and I believe he's got a wide context for the idea of crisis investing 2020 and the frame of reference and the things to think about, et cetera. So before we jump in, Rick, just for people maybe who don't know who you are, just talk a little bit about who you are and what you do.
All right. Well, I'm about to be 57 years old. I can't believe that. And
you are old, man. You are so old.
And I feel horrible saying this, but I've been built for crisis. Ever since my brother died when I was a baby, he was 4. I was the 7th of 9 kids, and my family was in crisis starting then. And then my dad died when I was 13, and my mother had never ever been stable after the death of my brother. So now, I always say I didn't have parents after 13 because I was on my own in North Jersey, just outside New York City. And, through a series of events that I started working in, Wall Street. I got licensed to do my first trades in 1986 as an options trader. And then the crash came in 87. That was horrible. And then the crash in 99, and then the crash in 08. And then, the one thing to keep in mind through all of this, no matter what happens in your life, what crisis you had as a kid or this crisis going on. It's never the crisis. It's always how you react to that crisis. And you could just look back in history and you just look at what happened before the crash in 1929. It just seems like every 10 or 11 years, something happens. You know, crash of 29, then you had World War II, then you had the Korean War, then you had Vietnam, then you had Watergate, then you had the crash of 87, then the crash of 99, then the crash of 2008, and then this. And it just is eerie, Pat, how they all seem to be about 11 years apart. So I don't know that I would call it a crisis or a crash, but I'll go along with it. A lot of people would just say it's the ups and downs of the market. This is how it works. You know, you get flush, you overspend, and then there's a correction, and you get flush and you overspend. So what I'd like to talk about, and I'll just say this one comment, and you can chime in because you know me as well as anybody in the world, that there's a saying that I had for about 20 years now, and it goes like this: don't let a good crisis go to waste. When everybody else in the world is fearful and panicked and freaking out, by the way, they're freaking out by things that they have zero control over, and they don't even know if they're true. While everybody's doing that, use this as an opportunity to transform the way you think, to transform the way you act, to transform your rhythms, maybe change careers, I don't know. But you don't let a good crisis go to waste.
You know, it's interesting that you use that comment or that phrase, don't let a good crisis go to waste, because that was what Rahm Emanuel said, back, when Obama was in office, that that's people, unfortunately, parasitic people use crisis to try to leverage a situation while people are in panic and fear. And a lot of times, unfortunately, like some of the things I thought was kind of off-putting with this stimulus package that was getting passed, multi-trillion-dollar stimulus package, in light of this pandemic and the economic impact of it. And people are trying to get things put into the bill that have nothing to do with the stimulus, the recovery or what have you. It's just an agenda, which is kind of the dark or the negative side of that thinking. But you're saying at the same time, maybe it's time for a reset on a positive way. For example, I had about 9 trips, that canceled where I was supposed to go to varying places. I've been spending a lot more time home with my family and kind of reorganizing my routines, et cetera. So are you, maybe suggesting that people could take a step back right now and say, what has not been right about my life and how might I use this circumstance as a transition to something new?
There's an aspect of that I'm saying, but it's also an opportunity for you to take on those business opportunities that you maybe have not had time for. So not necessarily going back, but taking a step forward. It's funny, I was with my business coach this morning and he said, use this chance right now to get lean and get aggressive about all the things that you haven't gotten done. So that's one aspect of it. But to go back to the political comment you made, there's a different aspect when you look at what I'm talking about from the perspective of a maker versus a taker. And throughout history, thousands of years, you got makers and takers, and it's very simple. Takers are all the people that tell us what to do, and makers put their head down and make stuff happen. And unfortunately, the takers take advantage of the makers because the makers are too busy raising their families and inventing things and being productive. And so I'm sorry that Rahm Emanuel said that, because that has absolutely nothing to do with my comment. It's a time for you to renew and refresh and recalibrate and meditate daily and think about abundance and be positive. It's funny when I talk to certain people right at the beginning of the call, it's like I feel this negative energy coming my way and they want to talk about Corona. And, I'm in a weird boat. I have to tell you, a very weird boat. I'll tell you why. I have never been on social media. I have a flip phone. It was just ringing. I don't have any newspaper subscriptions. We don't have a TV in our house that's plugged in. So I'm not hearing all the nonsense that people are hearing. And people are victims of this nonsense. I ask them a very simple question. get rid of it. No, I need this negativity. How could I possibly not have this negativity in my life? And in my family, we don't have any of it. I'm going to the office every day. Our rhythms are the same. So it's interesting. And by the way, I'm in a unique position because we have 4 young kids. I'm 57 with a 6, 8, 10, and 12-year-old. But my wife and I are very committed to, keeping the nonsense out of our lives.
So how do you separate? Because this is a part of it, and I want to, just in something on your background. Obviously, you already mentioned that you grew up on Wall Street. You traded options. You did all kinds of work there. You now have a holding company where you place investments in varying companies. So you make investments. So we'll get into a moment how you're thinking about investments right now. What you think people should be considering in times like this. So we'll get there. But you're making an interesting point in that I feel like there, so much of what is being reported is very fear, because and fear-based and creating panic. I think that fear is spreading more than the virus in the sense of that its adverse impact, and it's spreading very quickly. And it's probably a somewhat unpopular thing to say, but I'm talking about somebody. Listen, my brother, my sister-in-law, they just were diagnosed with coronavirus. Incidentally, very mild symptoms, and they're through it, and it wasn't a big deal for them. But I do know there's a lot of people suffering. I'm not saying there's not something really going on here, but at the same time, if you're drinking from the fire hose of all the news reporting and the rhetoric, and at the same time, you can't be completely ignorant. I mean, you're in Dallas. Maybe you got to know something about, are they shutting down the city? Are you even allowed to go to the office? What are some of the the rules they're putting in place right now during this whole pandemic? But at the same time, you got to filter out all the noise. So do you have a way of doing that? I mean, you can't just block it out completely. You have to have some sense of what's going on, right?
Of course, I have a sense of what's going on. We have public funds, and there's a lot of that. But I don't. I've never in my life been influenced by news ever. I don't watch it. I don't read it. I get most of my information from emails that people send me, conversations like this, my forum groups that I'm very active in for decades now, weekly accountability groups, things like that. But people have to know that news is completely biased. News exists because the advertisers pay for the space between the news articles. So you have to understand their bias. I loved the post that somebody said that James Woods sent. It was a guy like freaking out in a hazmat suit talking about this city somewhere, and then they zoomed the camera out and you could see people walking around and some people eating hamburgers, just walking around as normal. It was a complete setup. And people are shocked by that. How the hell is news any different than someone filming a movie? You're trying to create a story. And newscasters and news journalists in general don't want the facts to get in the way of a good story most of the time. And so that's why I've just decided to give it up. I mean, if something's bad for you, give it up. I don't shoot heroin either, because that's bad for me. It might be good for some of you, but it is shocking the thousands of people I have this conversation with, and nobody shuts it off. They just don't. It's like, I gotta get my negative news. So I think it's very important too, in conjunction with what we're talking about, to stay in your rhythms. Like, for example, I haven't missed a workout in 3 weeks, not one. I have, all my habits, calls like this, calls that you and I do, and the things with management teams, and all the rhythms and rituals, and time with my kids, and family dinner, and all of that. I think it's important to not change any of that in a crisis, because you want to have your life. You don't want the crisis to have your life. And so that plays into what I'm about to talk about in terms of strategies that people can employ, and they're very simple strategies. But the first strategy is to get this straight. If you meditate, meditate. If you pray, pray. If you go to, out to dinner with your kids, find another alternative of what you do. Dinner at the family, you can do that for now. so somebody taught me that 30 years ago. A friend of mine went through a horrific lawsuit with the government. He was based in Canada. He was actually a billionaire. And he said, the thing that got me through it was never changing any of my rhythms or rituals. And I never forget that.
Yeah, I think one of the things that I know you teach is rhythms and rituals to amplify time and success. But I remember in 2008 when that whole thing happened, and I was running a company then, and I was on the phone with you, the turnaround guy, saying, "Hey, we're really in trouble here. Do we start to do this, change this, do this, blah blah blah?" And you're like, the first thing you do is don't cancel anything. Keep all your appointments, keep all your things. Don't stay in your rhythm, stay in your rituals. And of course, right now, and to some extent, we are, restricted, all the enforced social distancing, et cetera. But at the same time, there are certain things that you can continue to do that you just described, like find a way to work out at home if your gym is closed. If you can't go to the office, make your appointments from home, keep your calls going, et cetera. So I think that somehow keeps a sense of normalcy in light of all of the challenges that are going on.
Absolutely. And the other thing, and you've heard me talk about this for years, is I call it the battleship principle. It's that, everybody says when something horrific happens, they say, I never expected this to happen. So I have news for all of you. Someone will die in your future. Someone will get divorced in your future. Someone will get cancer in your future. There'll be another economic meltdown. That will happen, 100% certain of it. There might be some bankruptcies with you or your loved ones. All of that stuff is going to happen. And you have to accept this as a fact of life. The battleship principle is, what can you do now? And I've been saying this for a long, long time. Now is now. Now was 20 years ago when I said it 20 years ago. But the fact of the matter is, what can you do now? And what you could do now is make sure you have a solid financial foundation and start building that right now. Everybody thought I was crazy, Pat, when I would get on stage with you years ago and say, the first thing that you have to do is build up a foundation of cash. And they go, but I got to buy a building. I got to buy stocks. I got to do this. But if you have the opportunity to think about your money in two buckets, half your money in cash-like products that are solid and long-term oriented and tax efficient. I could talk about that in a little bit. And the other half in private investments that have a long-term payoff. And those long-term investments are going to do quite well. And the cash is going to be used for two reasons. One, protect in a downside like this. Got a call from somebody who implemented this strategy, hook, line, and sinker, last Friday. His name is Randy. Randy, if you're watching this, you're welcome. He said, you told me, I did it. And the only thing that went up in my portfolio was that product that you told me to buy. So I think you have to, first of all, have the perspective that I'm going to say bad things, and I don't think it's bad. It's just life. Shit happens. But when you have the perspective that I can't believe this happened to me, that's absolutely ridiculous, because it will happen. Bad stuff's going to happen. And I promise you, something worse than this that we're in. So I've always had the perspective, as things like this are unfolding, okay, here we go, baby. Let's put on those gloves. And so that's half the battle right there. And you're kind of that way too, Pat. Just, I don't know if you've got what I'm about to explain as the barbell strategy of investing, but it's part of life. That's why we're entrepreneurs. That's why we get up out of bed. And people go, well, you're an entrepreneur. Well, guess what? Everybody's an entrepreneur. An entrepreneur is someone who takes responsibility for outcomes. So the minute you stop taking responsibility for an outcome, you're right. And it probably means you're dead. Right, Pat?
Yep. Or you're depending on the government to save you.
Oh man, that's so horrible. We're about to add about 100 million people to the dole, and it makes me sick. How do we get out of that? But anyway.
So let's talk about the barbell strategy of investing, and let's talk about, so two things we need to do. Let's talk about your general investing strategy, which I think is that barbell strategy. But then let's also say that I'll give you some kind of scenarios about people and where they are right now and what recommendations you might have based on on maybe a couple of different scenarios. So start with your general view of investing. You already started to explain some of it, but go ahead and get into that.
Okay, so the reason why we coined the term the barbell strategy is half your money needs to be in a safe place. And we found what we think is the best safe place, where it's a specially designed whole life insurance policy. And when you buy this policy, it's actually supposed to be a replacement for cash in the bank. Cash in the bank, you get a 0.5%. Cash in this policy is actually earning 3% or more tax-free. And we use companies that have been around for more than 100 years. So 3% tax-free is kind of like 5%. And the insurance companies can't issue these policies unless they've got them fully reserved. So it's very different than a bank. A bank, yes, they have FDIC insurance up to 200,000, but that's only if the system stays. Whereas in this product, you actually, there's reserves there. So I think it's the safest product on the market. So it's using a specially designed life insurance policy that gets a lot more return. We actually coined something called the 100-year savings solution. And if you want to learn more, you can go to 100yearsavings.com. But that's half the battle. And once you have enough money there, and we like to say it's half your wealth. So if you're worth $10 million, you should have 5 million safe. It's funny, I used to go to these conferences at wealthy family offices, and I would run into these huge families, massively wealthy. And one of the cornerstones of their financial wealth was these types of policies. I couldn't believe it. So the other half, you've got to put in aligned businesses that are private. You're not going to get the multiple returns sitting in a S&P 500 fund. You just won't. So what we like to tell people is a lot of wealth comes from investing in private companies that you own for a long time. You could invest in them passively, or it could be the company that you own right now. But use that company that you own right now, which is private, I would assume, as a wealth generating vehicle. You think about it differently when you're like, think long term, think 100 years out. When you know that you're going to have something around for the long haul, even if you're going to sell it. I have a friend, he actually created a company. He goes, I want this company to be around 200 years. And that was part of the reason why the buyer paid so much for him, was because he had this long-term thought process built into the DNA of the company. So just to go back a step and summarize, half of your money incredibly safe, half your money in aligned businesses, aligned with your knowledge, aligned with your expertise, aligned with your existing business. And why I'm saying that is, what most people do is they make dumb investments unrelated to what they have a huge amount of knowledge about. And that's where you go wrong. But if you're thinking about what we use internally, and this is a whole nother dialogue, but we have 3 operating values that we make decisions from: simplicity, probability, and leverage. And simplicity is keeping your life and your business as simple as possible. Probability is making decisions that will have a high likelihood, a high probability of helping you achieve the stated outcome. And then leverage is making decisions that are levering off of existing relationships, existing technology, existing know-how, existing businesses. So what happens is, when you put your decisions through that filter on this side of the barbell, you can see over time, wait a minute, if I only made decisions that were simple, highly probable, leverageable off of those existing things Rick mentioned, and they were private companies, I could see how, once we sell something or there's profit there, you could put it on this side of the pyramid, and it goes like this. The middle of the barbell, we tell people, they say, well, what do you put in the middle of the barbell? We call it the barbell strategy because most of the focus is on the ends, and the middle is, we like to say, people are addicted to their 401ks and IRAs. So we're like, look, maximize that, put it in the middle, but make sure you have a professional telling you where to invest that money. Because I just talked to a guy yesterday, his 401k is up 11% the last month. I said, how the heck is it up 11% the last month? And by the way, we're filming this in the middle of the crisis where the market's down about 30%. And he said, my advisor told me to position it in bonds because he thought the market was overpriced. So that's pretty interesting.
So let's look at a scenario based on this. And if you're, a lot of people watching this might be business owners, some might not be business owners. Maybe they're people that, executives, they make a good wage, they have a certain amount of money or wealth put into the market, maybe put into real estate and put into, some other areas. But they don't really have a context to say, how do I invest in a private business? And I don't have one myself. So they went maybe these other wealth development routes. But right now, let me give you a scenario. So let's say that I'm somebody who had, my money invested in, and I've been doing this for years. And I have, maybe a retirement account, IRA, 401k. I had money in the market. I just watched it, evaporate, a large amount of that wealth evaporate. And I'm wondering now, should I be pulling out? Do I, just stay in, what people say, for the long haul and watch it recover? Is there, do I want to, I didn't have maybe a cash account or, liquidity. I mean, obviously, if you're in the market, you can always sell and turn it into liquidity. But, do you think people just stay where they are, see how this thing unfolds? Or, I have people talking about options trading and the volatility and the opportunities to really kind of grow your wealth during this time. So what views do you have on those types of scenarios?
So I'm very set on my barbell, but you're talking now with people in the center that are in, for example, IRAs or 401ks. And, at this point, since you're listening to crisis investing, I would have you calm down. If you sell out now, the problem is you're now oftentimes you're going to buy in at a much higher price because that's when you'll be relaxed. And let's talk now then about the money that's not in these accounts in the middle, IRAs or 401ks or tax advantage accounts. If you have cash in the bank, or if you've sold out to take a loss in a non-qualified account, i.e. it's not an IRA, it's not a 401k, what you want to do is learn about opportunities in the sectors that you have expertise on. So it could be public companies. It could be, it's funny, everybody uses the same analogy, but the first time I ever looked at the car that I eventually bought, I never noticed it on the road once, and now I see my car everywhere, same color too. When you decide that you're going to invest in high growth private investments, all of a sudden you're tuned into that. You're listening for it more. You're open to opportunities to invest in private companies. I mean, you as a person who I've known 12 years, you oftentimes will show me a private company because you're now more aware of it. That I don't know that was in your radar 12 years ago. So I would say though, but before you take that step to invest in private companies, you've got to go and have your foundation solid as a rock. That's what makes you a battleship. The reason why we call it the battleship principle is because most people go through life and they're a little dinghy, they're by themselves in the middle of the ocean, the sky's dark, and the storm comes. And they're like, I can't believe this happened. What do you mean? It rains, there's storms. Of course you know it's going to happen. You want to think of yourself and your life and your family and your business as a battleship that no matter what happens, you're protected. And this large amount of money in this whole life product, to me, is an incredible battleship because you can't get sued. It survives all kinds of things. I think even bankruptcy. I'm not sure on that. I'm not a tax accountant, but I just love it as the starting point.
So now, what should the person do who lost the money in the market? In your opinion, I understand everybody's got different points of view. And there's really two pieces here. One is playing defense, saying, okay, I should preserve what I've got, because at the time of this recording, which we're in the midst of it, and we're going to release this still, it's going to be the midst of this whole pandemic crisis, uncertainty, et cetera. There's one says, preserve what I got, because the market could go down a lot further. I mean, there's a lot of people saying, hey, we right now, stimulus was announced, market went back up a bit, but one or two pieces of bad news, boom, it's going to drop to a new low. And other people saying, man, this thing's going to just recover. The fundamentals of the market were good before the crisis. When we come out of it, it's going to shoot back up again. And now here I am in the middle saying, I don't know. And the reality is nobody knows what's going to happen. So if I feel shook and scared, should I pull out at this point and just, take, my losses? Or do you think I should just say, I'll close my eyes, get through this. It's going to recover at some point, and don't do too much right now if you're panicked. So let's start with that question. What are your thoughts?
It really depends, Pat, on your net worth. If you're somebody that's living paycheck to paycheck and you do have money in even a 401k or an IRA and you're scared and panicked, I would turn that into cash. If, however, let's take the other end of the spectrum, you're somebody that's an opportunist, you've got money in a side account in addition to your IRA and 401k. So if you've got money and you're flush, I would keep the money invested. So just keep that invested in the market, because it would be hard for me to imagine that it takes a massive down stroke from here. I'm not predicting the future. It's just hard for me to imagine. But even if it did, your IRA and 401k are long-term oriented. Now let's talk about the other money. Outside of a 401k, it's in the market right now. The market's dropped. It potentially could drop more. I would be absolutely on the lookout for really, really good bargains. You're going to see companies trading at, for example, I saw one the other day, I can't remember the name, but it was trading for the market value of the business was lower than the cash that the company had in the bank. You have to find companies in your field of knowledge, your field of expertise, that are really, really, really good deals. And when you find one of those really good deals, be willing to bet something on it. A friend of mine called me in one of my forums about a week and a half ago, and he's like, I'm willing to take a massive bet on this company. He had done all this research, and my friend is worth an enormous amount of money. He wasted so much time. He was going to bet $100,000, and I said, I got to go. I got to hang up. Like, you're worth $30 million, and you're doing research to invest $100,000. It doesn't make any sense. If you find an opportunity, take advantage of it. So let me summarize. If it's in a qualified account, IRA or 401k, you wrote it down this far, leave it. If it's outside of 401k, you might consider two things: finding unique opportunities. And what you would do then is sell out, take a loss of what you have, and buy into unique opportunities fully aligned with your expertise and knowledge. But that would require you to do some research. I remember in one of our public funds, we specialized in owning casinos. And after the 2008 crash, casinos got absolutely hammered. And I said to the portfolio managers, it's time for us to go in heavy and leverage. But I wasn't the portfolio manager. They worked for me. And they didn't go in heavy and leverage. And there was a 1-year period, you could look this up if you do the research, where casino stocks were up 1,800%, like wow. 18 times. And we missed it, even though we were experts on it, because our guys weren't willing to bet on an area that they had expertise. And that's what it's all about. Everybody's in a different bucket.
Let me ask a second question, because I know you have experience and background as an options trader on Wall Street. It's one of the first places you really went to work after you got out of college. So one question I have, and a question that comes in, is given the current volatility in the marketplace, and given the fact that some companies seem to be really underpriced right now, and like airlines, for example, they still have all their assets, they still have everything in place, probably going to get a lot of stimulus money from this bill, but their prices tanked. If somebody knows about options or understands how to trade options to a reasonable extent, is going into placing your bets and doing it through options, an opportunity that you see in these types of times?
Here's the problem with options, and the experienced trader will tell you this. When the crisis starts and volatility is high, option prices are wacky high. There was an option I looked at 2 weeks ago in which the price was 13 times higher than it would have been in a non-volatile time. And that 13 is just premium. It's just the amount of money that flushed down the toilet. Options, in my opinion, are really bad thing to invest in, but I will give you a perspective on options. I believe that the low in the market will happen when everybody's exhausted. I remember a headline in a newspaper or a magazine from 2008, and I'll never forget this as long as I live. It said, it could have been Business Week, I can't remember, and I was so stupid that I didn't take advantage of it. It was, I think, Business Week, I don't remember, but I remember because I cut it out and I put it on my desk, and it said, the market is going lower, individual investors will never buy stocks again. And the article inside was about how no individual investors are in the market, it's over. And that was the low point. That date was the low point when the Dow hit like 6,500, I can't remember. So you know it's a bottom when everybody's done, when everybody's exhausted. Now that people are still trying to figure it out and speculate, and maybe I should do this, maybe I should do that, and prices are sky high on options and volatile instruments like that, doesn't feel like a bottom. Now, I'm not telling you to sell, but it just doesn't feel like a bottom. And I've seen 5 bottoms in my career, and this just doesn't, I could be wrong. We're stimulating away from the inevitable bottom. It doesn't feel right. So I wanted to make sure that that got out before we end the interview. I know you're on a time crunch, and so am I, but so I am not a fan of options when there's volatility. So why did I bring up that topic? I brought up that topic because when you realize that maybe Rick's got a point here, I'll know the bottom when the bottom comes. It's when everybody and their mom is out. That's when you buy call options, because that's when they'll be cheap. The volatility is lower, and that's where you get the return. So that's when options come into play, in my opinion. If you do them now, you're paying way too much, and you don't really know where the bottom is. I wanted to make sure that we said one thing that you and I have experienced together. The first thing I did about a year after I met you is I said, Pat, let's get together for a day, me and you, and let's have a war room. A war room is when you assess all your assets, all your liabilities, all your special opportunities, your strengths, your weaknesses, your threats, and you brainstorm about your life, and you get a bunch of people that you respect, not a bunch, 6 to 8, in a room with a whiteboard, and you lay out, just like we're going to war. This is war, and you've got to assess your resources. And out of those meetings, I remember you came out of that meeting, you went in like, I don't know how many options I had. You came out of that meeting with a lot of options. And I think it's time for people to lock themselves in a room and assess their resources right now.
Well, you know, I'm so glad you brought that up. And incidentally, thank you. You know, you and I were in an accountability group together. And when the crisis hit, we're all business owners. You had, I think, the most experience as a turnaround person and knew how to think through these things. But you got on a plane, flew to New Jersey, came into my conference room with my executive team. And I will say that just one idea, and exactly what you said, just SWOT analysis, you know, strengths, weaknesses, opportunities, threats. And one of the things you asked is, what assets are on the shelf that we're not using right now? And we found assets on the shelf, because like most entrepreneurs, we're on to the next thing. And literally within, I think it was about 45 days, you know, those assets taken off the shelf and deployed turned into about $250,000 of net cash that we sorely needed at that point in time, just from sitting down and thinking about this. So what I would say is that I think the idea, no matter, you know, some people might be looking at this saying, well, I'm not really a business owner though. You can have a war room on your own career and finances right now. And that's the whole point of this. To me, Crisis Investing 2020, this whole project is a war room. It's sitting with people, having the conversations, thinking about a lot of different angles, seeing how it applies to you, the viewer right now. How are these things applying to you? And then saying, okay, now I can make decisions, you know, that can actually lead me to higher ground and pretty quickly. That's the whole intent of this. So I think that the concept of having a war room is really important. I think bouncing off of guardrails and you know, whipping from one decision to another is a bad idea. It's collect some information, collect some context, and then look at your whole situation. Where is all your money right now? Where is all your wealth right now? Pulling it all out and saying, okay, now what do we do based on all of this? So I'm really glad you brought up the war room concept, because it's a very powerful concept, and I think it leads to some pretty amazing outcomes when you take the time to do that. So thank you for sharing that.
I also want to leave them with one more thing that I find pretty powerful. And I've interviewed a lot of people in my life. I had an audio, what I learned from interviewing 44 billionaires. And what I learned from that is that you got to focus on what's important. And if you ask people what's important to them, they're not going to say, being glued to my smartphone, looking at the latest COVID news. That's a horrible way to spend time. And so we've come up with the hand to represent priorities. And most people, when you ask them what are your priorities, they say God first, family second, career third, kids fourth, hobbies fifth, whatever. But then if you follow them around from the minute they get up in the morning to the minute they go to bed, to spending 80% of their time doing everything else. So I've come up with this way to demonstrate it to people, and my kids know it for me. My thumb represents my marriage. My marriage is incredibly important to me, and my kids know that. Obviously being a dad is part of that, but marriage first, my spouse first. Here is my health and fitness. Doesn't matter what the economy is doing. I'm going to make sure I keep my mind and my body healthy. This is my purpose and my work, my purpose work. My purpose is to inspire entrepreneurship and work inside my holding company. This thing right here is my key relationships. I want to nourish them. And by the way, key relationships aren't Facebook friends. How many Facebook friends are going to be at your deathbed? It's just silly that we spend so much time there. Key relationships, ones that you spend time on. And lastly, right here is my learning and growth. And all of it is held together by my creator. But here's the point. I tell my kids, Daddy's only going to spend time in these 5 areas. That's it. And if I'm not, you could kick me in the shins. But I want you as the listener, the viewer, to pick those 5 priorities and only do that. Magic will happen. And all this time you're spent, trying to figure out, is Bill Gates involved in COVID, or what are the Chinese doing? You got to focus on the things that you can control. And you can control this, where your time goes. And that is critically important. And once you do that, you can then focus on what all the other people are teaching you regarding crisis investing. But you got to get that right. And this is way more powerful than, you're going to go, that's pretty interesting. And you're going to go on to the next COVID article. No, drop the phone, do this, tell the people that are important to you in your life, and you will see a radical shift.
I love it. I'm going to advise the viewer right now to rewind and watch that again, because I think that really is it. I think this has always been the key to your success, Rick, is having that lens of simplicity, probability, and leverage, which I've adopted, and anybody who's heard it usually adopts it. And that's the simplicity, saying here's the 5 things, and if something's not a part of those 5 things, I don't get distracted. And I think distraction is the enemy. And if we're going to be talking about how to deal with crisis investing or investing during a crisis, I think the first thing is you got to remove distraction and get very clear, and then have know what your values are, make sure you're following those values, to have a clear path to what decisions and actions you want to take, as compared to second guessing, third guessing, trying this and then doing that. You're in and you're out. That's the disaster. You're better off doing nothing. Okay. But if you can get to simplicity, behave in the way that you're describing, and then make some decisions and follow through, then I think you've got a really very high probability positive outcome by doing that. So as always, Rick, thanks for being the voice of reason in all the chaos.
You're welcome. And, by the way, if you notice, Netflix wasn't one of my priorities. So I did this to somebody who goes, "Where's Netflix? It's 30 hours a week." Anyway, you're welcome.
That's great. Rick, thanks so much. Thanks for coming into the office and sharing time with us today. And I know that people gained a lot of value from this. I know I did too. So thanks very much.
You're welcome. Thank you for inviting me. I appreciate it more than you know.
Greetings to you who are watching Crisis Investing 2020. One of my favorite human beings I've met in the recent past is with us right now. It's Alan Aquina. And why I love Alan, and I gotta give him props. When I interviewed him for one of our other money projects, he was giving insights into how he deals with money and his children, and gave some advice on even how to give during Christmas and so on. And I literally took his template and used that for my 3 kids. So he's somebody that's just got some really amazing common sense insights when it comes to finance, personal finance, how to manage that. And that's what he does every day of his life. He's the founder and CEO of 101 Financial, and he's got thousands and thousands of people who are going from financial challenge to financial freedom as a result of what he does. And I know his heart and passion is very true on all of this. So when I asked, I said, hey, do you have some comments about what's going on right now with the uncertainty and the sudden downturn in the market and literally, almost the halting of the economy? What kind of advice are you giving people? Or I'm sure you're getting a lot of questions. And he said, yeah, I've got something to say about all of this. So let's have the conversation. So Alan, thanks for taking the time to do this.
Yeah, thanks, Patrick. Good to be here. And thanks for allowing me to speak to your team.
Yeah, no, my pleasure. So I guess we'll start out and just say, from your point of view, and especially I know you're maybe calibrated toward the people you serve, through 101 Financial, who are, not necessarily, entrepreneurs that are wealthy and generating large amounts of capital, but, they might be on the lower end of that scale where they're looking at reducing their debt and saving and getting to, financial freedom and finding a path there. So incidentally, talk about any dimension of this, but I know that you serve a certain community, and I'm really curious as to your thoughts as to what you're telling them and what you're thinking for yourself right now.
Yeah, we've been having a lot of conversations. As you know, this has probably been one of the craziest times in the history of our world, and definitely in my lifetime. I've been in the personal finance space for about 17 and a half years, and seen the recession, but this is completely different. It's an entirely different animal. And the first thing I want to say is to everyone watching is, we have to be mindful of our mind, because what's happening and what I see is people are making decisions now based on fear because of what's happening around us. And when we start making decisions based on fear, it typically doesn't turn out too well. And so what I like to say is, I give people 3 simple things. I say, hey, first thing is, let's evaluate the situation. Let's sit back. There's a bunch of news going on, right? On TV, the news, on social media. What do we believe? And then we see things happening and we hear and we're making assumptions. So the first thing I tell people is, let's just sit back. Let's evaluate the situation. Let's think logically, okay? So we're sitting back in our chair, we're kind of watching what's going on, and let's think this through. So what's really the bottom line that's happening? Well, the bottom line is, there's a new strain of the flu. It's what it is. It's different. It's scary. It's more contagious. But have we been through this before as a country? Yeah. And you look at, in 1918, the Spanish flu, and then all the others like SARS and swine flu and Ebola. So this isn't like we haven't ever been through this before. We have in some way. Maybe some of you are younger, may not have experienced that. I definitely wasn't around in 1918, just to clarify the record, but our country has seen that. And so it's nothing new. We don't have to freak out about it. We do have to be aware of what's going on. But if we sit back and we think things through, which is my next tip, evaluate the situation. And now let's think things through, which is and I'm going to speak financially, okay, not about the health stuff. But if this is happening with the flu, we see people are out of work, right? 70, 80% of the population, they're out of work. So now if the major part of the population is out of work, what's going to happen next? Well, they might not be able to afford their rent or their mortgage, okay? Now, if they can't make the mortgage payment or the rent payment for an extended period of time, then the landlord is going to carry that. And the homeowner is going to have to carry that. And then what's going to take place later on down the road is foreclosures. And so you want to look at what's happening, what's going to happen down the road if we think logically. And then the third thing is be open to the opportunities that will come about. And I'm speaking financially. And in no way I'm trying to say that we're trying to take advantage of the situation. But your members, your followers, you're very, very savvy, right, Patrick? These are very savvy individuals that are doing better. And so those that are doing better, financially speaking, have these opportunities. And I was listening to a video by Robert Kiyosaki recently, one of your partners here, and he said that the majority of successful people become richer. So the rich get richer after a downturn, after a crash or a crisis. Why? Because they're not operating on fear. They're operating on logic, and they prepared themselves financially for what's going to take place. And so I think one of the biggest things that I see, and I'd be happy to share this with your team, that I see as an opportunity personally, is opportunities in multifamily and commercial real estate that is owned by older folks, older people. And the same thing, there's opportunities there's great businesses. There's these small businesses all across the country that are like $2 to $5 million. They cash flow, they make money, but they're owned by an older generation. Now, this is totally going to change their way of life. They're going to be a lot more afraid to come out. So if you think about an older couple that owns a multifamily unit, an apartment complex, all of those are renters. So most of them have probably lost their jobs. They're not going to make the rent payment. So now this landlord that owns this building has all this pressure in their old age having to carry this. And they're saying, you know what, I'm done with this. I'm too old to go knock on doors. I don't want to catch anything. I'm in that high risk over 65. And so, you know what, it might be best for my spouse and I just to get rid of this and we'll just sell off into the sunset. I'm willing to let go of it at a discount. And for people like you and I, Patrick, we're looking for discounted things. We're looking for situations where we can acquire an asset at a lower price. And so in this situation, we'll create a win-win. Why? Because we take a property off of the hands, less stress, less chance of getting sick from an older family, and then we get a discount. So that's a couple of things that I wanted to share right off the bat.
Yeah, and I think I like the way you're characterizing, and it's aligned with some of the other people who have been talking about this. Is that number one? Some people say, it's opportunistic, to step in and take advantage of a down market. And the opposite is really true. And now I will say, to me, this is what opportunistic is. You find out there's a run on hand sanitizer and you run to every store you can and buy up all the hand sanitizer and try to sell it at 10x price. That
or toilet paper, you break it up and sell it $5 per roll, like you probably seen on the internet.
Right. That's being opportunistic. Yeah. That's being, in my mind, very, very unethical. You're not adding value to the culture. You're purposefully creating scarcity and trying to profiteer. I think that's an ugly thing to do.
Yes.
However, when a market has a downturn, and like what would turn the stock market around is when people start buying stock again at lower prices, that starts getting the prices higher again. What would take a real estate, a market that could be in a slump is people stepping in and start buying real estate. So it starts getting the engine moving again of the economy because transactions are occurring. The scary thing about this is that everything froze. It just stopped. And by compulsion,
it was immediate stop.
Yeah. It was like everybody stopped and stay inside. It was like, what? So it was, so that was what makes it sort of unprecedented. But I like about what you said is that, listen, we can, if you're somebody who has some means, meaning you have some liquidity at the moment, and maybe even you're licking your wounds, the market dropped below a point where you felt like you need to get out, you couldn't take it anymore, but you still now create some liquidity. At some point in time, you might want to enter while there's still, an overcorrection, or there's too much panic, and start moving things in the other direction again. So, and it was interesting because in your characterization, like you said, it's kind of common sense, is saying, cash flowing real estate's always a good thing to hold, and the psychology of the market might be such right now that there's certain people who are holding it that are willing to come out at a discount. And as you said, it's a win-win. they're getting what they need as far as psychological security and being out, and you're getting a good deal on a cash flowing asset that can move into the future. So that, so I like what you're saying there. Any other considerations?
I think what was interesting, you mentioned this, is with the stock market, right? The last 2 weeks, now the last few days, the stock market has been going up, but the 2 weeks previous to that, it dropped. And you start, so we do the same formula, right? We sit back and evaluate, we think things through, then we look for the opportunity. So when I sat back, okay, well, why is the market dropping? Okay, well, people are losing jobs. So they're losing jobs, so they don't have any money, so they sell their stocks, right? We know that prices drop in the stock market because there's more sellers than buyers. So people are fearful, right? This is where we're talking about fear is leading them to sell off assets that they might not need to have sold off. Some of them may needed money, but most didn't. And so it created this environment, and then people are like sheep, right? We go in herds, right? It was like, oh, these guys are selling, we better sell. And the news is going crazy, the market's collapsing, I better get out. Everybody's getting out. You know what? We should adopt that very same mentality, like you said, of Warren Buffett, one of my favorite investors. You buy when everybody's fearful. And that's what I did the last few weeks. Is the last 2 weeks was starting to buy these great companies, right? Really good companies that were selling at a 30% discount or more. And why did we do that? And why should you be doing this, folks? Is because you're making decisions when you're in a state of calm, right, not on fear. So
yeah.
I mean, there was opportunities, and I still think there'll be opportunities in the stock market as things start to kind of fix itself. And it's down as of today. The S&P 500 is down 22% from its high of the year, so it's still at a discount.
Oh yeah, I mean, and I should mention that at the time of this recording, by the time anybody's seeing this, it might be a couple weeks or more later. But the thing to understand, this is really fluid right now, and I am startled at this. I've seen 2,000 point drops. I've seen 2,000 points up. I've seen all this back and forth. So nobody knows, and when I say nobody, I mean nobody knows a week from now, 2 weeks from now, 4 weeks from now where the market's going to be. I would suggest that it's probably not going to go back to where it was prior to everything stopping, but there's going to be, I think, still a good amount of volatility going on. And I think we're in a level, if I'm interpreting what you're saying correctly, we're sort of in a level heads prevail scenario, saying, I guess you'd start with this premise. Do you think things are going to get back to a stable economy again? I think nothing. We can make an argument it's never going to be exactly the same. There's going to be a post-coronavirus world that we're going to live in. But if you believe that there are these great companies, as you said, that are oversold because of fear and panic, and you don't live day by day by the ups and downs of the market, if they're still discounted, is it your opinion that it's a good idea to go in there and invest in these companies?
I think so, and that's one of the things that I have in my notes to speak to you about today is when looking for opportunities, finding financial opportunities in a crisis, there's going to be all sorts of things, but we have to really go back to, does it fit in our financial plan? Because you might see this great opportunity, but if it's not in your wheelhouse or in your financial plan, then it might not be a good idea to waste time and energy on it because it's just outside of it, even though it's an opportunity. So I always advise people to go back to your long-term financial plan. What is it? And usually people's financial plans include a certain end number, right? What is I call it your done number. What is it going to take for you to get there to just be done, right? And that usually includes a certain amount of money coming in per month, cash flow from assets, right? Not including your work, because we're going to be done with work, but I always talk about cash flow from assets. And when we look at assets, I really like to break it down into three simple asset categories: paper assets, business assets, and real estate assets. So if you look at your financial plan, what do you have in there for your plan? How much cash flow do you need from each asset? And if it fits, then you should go for it. If it's an opportunity that you you find and it fits in your plan, then do it. And I found that when people do have a plan that has true diversification in it, which I like to teach my students, is in 3 asset categories amongst all 3: paper, business, and real estate, as opposed to just like what most financial advisors say, hey, diversify your portfolio, but they're really only talking about paper assets. Mm-hmm. So true diversification comes from all 3 major asset categories.
And I think, interestingly, as you talk about those different asset classes, and you're looking at, let's say, equities, are you normally liking to purchase? Because now I'm saying people are watching and saying, oh, I'm going to go look for some of these stocks now that maybe still be discounted that I can get in on. And I'm not looking to get rich in a month, but I know that if I hold for a while and that this economy starts to turn, that I can really land in a good place. Are you looking for dividend paying stocks, or what are you looking for?
So great question. So paper assets, equity. So in my opinion, there's really 2 strategies, right, that I personally use. One is the long term, and just overall, just so we are clear with your viewers, is that paper assets is not a get rich quick type of thing. This is the long haul. So if you compare it to like being at a track meet, the paper asset investment is like the marathon. This is a long haul, and you just got to just keep steady. And so we have what we call dollar cost averaging. So I have in a couple different accounts, my Vanguard and my Charles Schwab. Every month, one of them I have monthly, just automatic purchase, and then the other one is every other week. And I just pick a couple really good funds. I mean, simple things like S&P 500 stuff. Why? Because that makes up the top 500 U.S. companies, and I put those 500 up against any other companies in the country. They're going to be around. So it's just steady, just consistently doing it month in, month out. And some months it's going to buy at a high point, and some months it's going to buy a low point, but it's going to dollar cost average over time. So I have that going. Then the other stuff is kind of like fun money, but I don't like to lose money or waste money. So I use apps. The one I was talking to you about to use for your kids. So I set it up for my kids years ago. My kids were doing well, so I set one up for myself, and it's called Stockpile. In fact, I found the original gift cards that I bought for my kids. And so I got all my kids set up on this app, and I set up a custodial account. And then for Christmas, I bought them these gift cards. And so one of my sons, I got him Apple. My daughter, I got her Disney, $25 of Disney. And my other son, I got a $25 gift card of Tesla. And my thought was, okay, let me get them off of having Amazon gift cards to purchase things and get them onto stock gift cards. And so with this, we have to scratch off the back, open up their app, and we set up the custodial account, and they pick these stocks. And so what I did, and I said, okay, I'm going to put $300 in each of your accounts. And I want you to come back to me with 3 companies that Stockpile is offering that you can buy shares in, and tell me why you think these are good companies that are going to be around for a long time. Mm-hmm. And each of the kids were different, right? So my daughter, she's 17 now. I think she was probably 13 or 14 when we started. She had Urban Outfitters. I'm like, Urban Outfitters? Well, tell me, baby, why'd you pick that? I said, well, duh, Dad, all the teenagers shop there, and it's an expensive store, so they're going to make money. I'm like, okay. And then my other son liked Microsoft. He just really liked Microsoft because of the returns and how long they've been around. And so they all have their companies, and we did it, and it's been great. And so they had all this fun, so I put money in my own account. And I started picking companies. So I kind of use that, and it's 99 cents a trade, whether you buy or sell. So it's pretty affordable. So I use that for my daily. And then I just opened up an account with Robinhood. I'm pretty excited about Robinhood because Robinhood just takes it to that next level. Stockpile is like for beginners, for kids, gets you going. Robinhood gives you a little more tools. But they're getting to the point where they're doing what Stockpile's doing. So they have you can sign up to do fractional shares. That's what I like about Stockpile as well. So, I think Apple is at like $226 right now, two something currently. But buying fractional shares allows our kids to buy $5 of an Apple share, so a fraction of that share. So it makes it simple and easy, teaches them the game. And I really believe that extra financial education for our kids will take them to a whole nother level in their future. And so that with Robinhood, I do my trades, and I'm not timing the market, but I just buy companies when I see that they're in a discount. And then my dollar cost averaging is happening in my Vanguard and Charles Schwab accounts. So that's kind of how I handle my paper assets.
Yeah, interesting, because I think there's some people who maybe were on the sidelines. Maybe they didn't have an equities, a brokerage account of any variety, and they basically are saying, what would be a way in now? I have, maybe I have not a lot of money, but I have a couple $1,000s to invest, and I'd like not to just sit in cash, and maybe it's time to go in. And so Robinhood, you think, is a good way to get started?
I think so. And here's what's interesting. I did a Facebook Live event last week, and one of my longtime friends from Hawaii, she's a single mom. Her husband actually, he was a famous photographer on the North Shore of Oahu, and he died. He got bit by a shark. His name is John Ozel. They made movies about him, and it's pretty crazy. But she's been a friend of mine, and she heard me talk on one of my other previous live events, and she came back on this one and she made a comment. She said, "Hey, Alan, I bought my first stock." Like, getting in the game, just helping people to take that first step is really cool. And with today's environment, just within the last 6 months, the trading industry has completely changed, where they brought their prices down to basically zero. So you can trade for free with Robinhood, stockpiles at 99 cents, and almost everyone has brought it down to zero. The tools are there, and it makes it much easier for families and new people to jump in the game, especially with being able to buy fractional shares, right? They love Amazon, but Amazon's $1,600 a share. Well, they can buy $100 worth of Amazon and be in the game. And as you and I know, the first step is always the hardest step. You just got to take that first step.
And that's true. So 2 views right now. One is, hey, it's really uncertain. Stay on the sideline. Now's not the time to enter. Give it a few months. See where things are at, and then maybe, go in. So if you have any liquidity, hang on to it, versus it's a good time now, to step in, because things have really sold off. There's no guarantees. It could go lower, but it's still a good time to get in based on what you see in the circumstance. So do you lean one way or the other when giving advice, or is it just dependent on their headspace?
Yeah, so I always go back to what I said. Hey, what is your long-term financial plan, right? Is whatever opportunities are in front of us now, will that get you to your plan? And some people don't have stocks. I was on the phone with a friend of mine in Hawaii the other day, and he took all of his money out of the stock market, and he does real estate, and he flips 5 to 10 homes a year, and that's what he does. And so that didn't fit in his plan, but others do. And if that is part of your plan, or you want to make it part of your plan, now is a great time to do it. And again, we can let fear drive us, or we can be calm, cool, and collective and say, hey, we're going to find good companies. And it's always better to find good companies or good mutual funds that you can buy that is safer. And I'm not saying every investment is going to make money or be safe, but I don't think Apple's going to go out of business, or Disney, right? I think they're going to be around for a while. So just getting your foot in the door, taking that step, overcoming that fear, will start to open up your brain space. Because when we operate in fear, then our brain is closed down to new opportunities and learning. And so we miss out on things. And I call it being in the survival mentality, right? When all this stuff came crashing down, and then, Doc, I don't know if you felt the earthquake that happened here in Utah.
I did.
Okay, so
Yes.
That was like the first time I've ever been in an earthquake, because I'm from Hawaii. We don't have too many of those, so it was like freaking out, right? And so immediately I felt my body go into survival mode, like, oh shoot, we need a water. Do I have a generator? Like, freaking out, right? And everybody was freaking out. But when we stay in that survival mode, is good to get our families taken care of. But if we stay in that mindset, then it it sucks up 100% of our energy. And to be an investor, to build wealth, you need those brain cells to operate, to think things through, and to look for opportunities and research and put time in. But if all of our time is focused on surviving, we're wasting a lot of time.
Yeah, and usually in that frame of reference, you're just not making good decisions.
Right.
So
I agree.
I think that's good. Really sound advice. So I think, in the end, I think to summarize here, keep your head, get calm. Don't make decisions out of fear. I think also FOMO is a big thing now too, which is also not the right headspace. Oh, the fear of missing out. Saying, oh my, because what did we start the conversation with, and what everybody knows? It's in these times when these types of events occur that a lot of people get very well, or some people get very wealthy. A lot of people lose money. There's a great transfer of wealth during these periods in time. So now I think there's a FOMO element of people saying, oh, I got to jump in, I got to do something. But if you don't have the plan, your headspace isn't clear, et cetera, you end up actually losing rather than winning when you jump in. Is that a fair statement?
Yeah, I felt that way in 2008, 2009, when that recession hit. I was in the middle of building my company, and so all my money was going back into building. So I didn't have excess cash. And then friends of mine were like, oh man, these stocks are on sale. And I bought 5,000 shares of this or 2,000 shares. I'm like, man, I can't even buy 2 shares of that. I'm missing out. And so I did feel that, but I just kept to my plan. I just stuck to it. I just kept doing what I was doing. Business was part of my plan and building that up. And here's the thing, for all of you that may feel like you're missing out, you're not in a position right now to be able to buy stocks at a discount. You can't buy that foreclosure that may be coming up in a little bit. Well, we're here to tell you that there's going to be another type of crisis. Do we know what it is? I don't know. I mean, who would have thought that a virus would have shut us down like this? Had no clue. But it's not if, but it's when it'll happen. When it does happen, will you be financially ready so you can first and foremost take care of your family? And then secondly, be ready for these financial opportunities that come up. So don't feel bad if you're missing out on this thing and you're financially not in shape. Get financially fit now. Use this time, and you're probably at home, so you can watch great trainings like this, read books, and educate yourself so you can be ready.
Well, Alan, great advice. Thank you very much for sharing with us. Is there a parting thought that you have before we tie up?
The last thing that's on my mind is a suggestion that I have, and I did this, and so I got all my family together, and I have a big family, so we have 7 kids.
Wow.
I have 6 of them at home, 1 serving a mission right now. So I put all my kids together when this stuff started to hit the fan, and we sat down and had a meeting. And I talked to my kids about what was going on in the world. And then we talked to them about what's happening financially. And we said, we need every one of you to chip in. And we got kids that are not even 2 up to 22. So a wide range. And we told them what was going on. So we said, hey, we can't be doing this as much or going here. And, our trip to Hawaii for spring break is not going to happen. And so we all got to help and tighten that belt. We don't know how long this is going to last, and chip in. That was a great meeting, just to be upfront and open with them. And my daughter came to me and said, hey Dad, and she's 17 now. She said, do you need Keanu and I to go get a job? We can go work. We can help out. I said, no, baby, fortunately, we're in a great place where you don't need to do that. But, we appreciate you helping out, and we'll just cut back on what's going out. We're spending. And I think that's great advice for every family out there. Let's be open with our kids, because I don't know if it was like this for you, Doc, when we were growing up. It felt like it was almost illegal to talk to your parents about money. Like, hey, Dad, how much do you make? We couldn't do that before. I think times are different now. We should be more open with our kids when it comes to all things money. So that's my last parting tip, and I hope that helps.
I think that's a great parting tip, and we've been having some interesting conversations and behavioral change here, because my daughter, both my kids actually work. My son's still in high school. My daughter's just out of high school, and but they can't work. They're not leaving the house right now. School is shut down, And one of the things that has been really interesting is the family time, and how and I feel extraordinarily blessed in the sense that I live in I have space around me, and we live in Park City, so I live in a resort town, and it's really beautiful here. So it's not like quarantining is like you're huddled up with 5 people in an apartment. And I feel for those people. And secondly, my businesses can run virtually, so that wasn't really a thing. But what I see now that we're here in this environment is putting my kids to work in the house, to take more responsibility around what's going on, having those conversations. Say, hey, you guys are here, you live here, and rather than being out there, they're out doing this, that, or the other thing. You got responsibilities at home now that we want to see you take care of, and seeing them change rhythms, routines, and adopt new behaviors that are, I think, healthier and more productive behaviors. So it's been really, really interesting. I always try, like, I see a lot of really challenging circumstances and a lot of things to be concerned and distraught about. But whenever I'm looking at anything, I'm trying to say, okay, so where might the beauty be in that? Where's the thing that maybe is a blessing in it as compared to something else? So I love the fact that you had a thought around that in the experience, and how it's because a lot of people are looking at, how do I take advantage of this opportunity in a benevolent way, but still want to get in on something here. And sometimes there's maybe other, I guess I could say, other benefits that can be derived from this crisis right at home that we're not looking at. So thanks for bringing some.
Yeah, and Doc, why do we do all this, right? Why do we work hard? Why are we looking for financial opportunities? At the end of the day, it's for our family. That's right. At the end of the day, what all this comes down to is for our family, for our kids, and that's what I appreciate about you. You're a great family man, and being on FaceTimes and Zoom with people now. I've been talking to a lot of people, and I've been talking about what I've been teaching my kids. So I have financial classes right in my living room here, and we're talking about stocks and this and that, and it hit me. I was like, how many of you would like me to teach your kids? And then all the comments like, yes, please, please. So I actually, just last night, I wrote the entire curriculum for what I call the ABCs of Money with Uncle Alan. And it's going to be every Tuesday and Thursday in April on my Facebook. I'm just going to do it on Facebook Live. It's going to be free for anybody that wants to just join. It'll be on my Facebook Live, and Tuesday and Thursday at 12 Mountain Time. And I'm going to do like 30 minutes, 40 minutes on different subjects. So I have 8 lessons that I'll do. And I'm also going to give homework assignments. And so like I was up to 3:30. I couldn't sleep because I was so excited about the curriculum that I put together. And I just can't wait to teach all these kids. So thanks for letting me.
What is your Facebook page where you're going to host this?
Yeah, my Facebook is just Alan Aquina, AlanAkina, Facebook.com/Alan Aquina, and 12 noon Mountain every Tuesday, Thursday, and you just put the computer up and let Uncle Alan teach your kids the basics of money. So yeah, I'm excited.
I love it. That is fantastic.
And one of the lessons is on this thing too, on the stocks. And I know the kids love that part. So.
That's so great. Yeah. So listen, if Tuesdays and Thursdays, I think my kids could benefit from these lessons. And
there you go.
Yeah, it's just a great service. And I think those are some of the things that emerge from this. Say, hey, we're home. Other people are home, and it's just, there's an opportunity here to be more mindful, to consume things that that might be beneficial to us that we don't normally do, like training that you're doing. So
yeah, I love the way that companies, right? All these companies that are doing things for our country, like I heard Nike today is making masks. They're turning their factories to make masks for the medical workers and clothing. And I've seen all these companies start to jump in, and they're donating this and they're donating that. And I'm like, what can I do? And this kind of popped up as I was doing my service to people on Facebook, like, hey, let's take it to the next level and teach kids. And so it just feels good. I'm just happy to be able to do, I don't do very many things well, but money is one, and I'm happy to share that with people.
That's so great. Well, thank you for doing that. And thank you for sharing right here now with people. As always, you're an inspiration. You keep things very how can I put it, like common sense. It's just like everything you're saying is just straightforward common sense, but it's also something that is useful and something that can deliver value. And if people would follow these common sense things, they'd be in a better place. So thanks as always, Alan, for sharing with us. And yeah, let's keep in touch.
Thank you so much.
Well, that's it for episode 3. Great to be with you right now. And episode 4 is coming up. We have in episode 4 one of my favorite people in the world, Garrett Gunderson. And if you ever want to see passion, insight, excitement, inspiration, all mixed together with a view of what to do next, that's Garrett Gunderson. You're going to love what he has to say. And then we have our go-to gold guy, I call him, and that's Adam Baratta. Adam is one of those guys who just believes everything he does 100%. He's all in, all committed. The perspective he gives on gold and why you should own gold as a part of your investment and wealth strategy is very compelling, especially in times like this. So I'm looking forward to being with you in episode 4.
COVID-19 was a heavy straw that broke the camel's back, but the camel was overpacked with leverage and debt. And I've been saying, I said, if we don't have a recession by the end of 2020, I'm retiring from the financial business because fundamentals don't matter anymore. There's things that you absolutely can do to protect yourself, but if that becomes the only consideration you have, you're going to lose the game.
In the face of a recession, what does the Federal Reserve do? The Federal Reserve typically cuts interest rates 500 basis points. When there's no room to lower interest rates, the only thing left to do is to print more money. And as you see government response, you're going to see a massive devaluation of currencies moving forward, and why you're about to see gold really move higher. You're likely to see gold at $4,000 to $5,000 an ounce within the next 4 to 5 years, in my opinion. And then you're going to see it explode to 10 in a very short period of time.